What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button if you enjoyed this video. It really helps the channel grow. Thank you again to all those who continue to tune in. If you haven't already, make sure you hit that subscribe and notification button. It alerts you to when we release new videos. We do release bonus content from time to time, aside from the nightly and weekend videos. But the nightly and weekend videos, like today's video, we mostly focus on identifying triggers and targets for trades ranging all the way from, scalps and intraday trades all the way up to long-term swings or leap trades as well. So if you want to deeper dive into exactly how we set up our charts with the broadening formations, different levels of support and resistance, things of that nature, make sure you check out those bonus videos in the videos in the bonus content section of our YouTube page. And make sure you grab the free PDF reference guide for the strat, which is the base of our charting and trading method. And that's in the description of this video, and that's for free as well. So I do encourage you to watch the full video, although we go over triggers and targets for, the next day and scalping and things of that nature. We do go over some pretty good information for all time frames. So go ahead and hang with us through the whole video. I'm sure you'll be happy that you did. Let's go ahead and look at the agenda for today's video. We'll go ahead and recap price action for Wednesday, December 31st. Oh, Happy New Year, by the way. I guess I didn't say that at the beginning of the video. But then we'll go ahead and zoom out like we always do, look at the week, month, quarter, and year. It is not a new week on Friday, but it is a new month, a new quarter, and new year starting on Friday. So it'd be important to make sure we zoom out and get level set and know where we're at for the start of the new year. Then we'll go over the market maker's expected move for Friday, January 2nd. And finally, we'll zoom back in and set the 4-hour triggers and targets, 4-hour markers and our triggers and targets for Friday, January 2nd. And we will also review the triggers and targets for the week, month, quarter, and year. All right. So let's just look at Friday's price action. Oops, let's get our charts up here, right? And just starting with the 5-minute chart like we always do, looking at the opportunities to get quick scalps in the morning or get early entries into a trending day. So the first thing that we have to do is identify the 4-hour markers. That is the previous high a day, overnight high, previous low a day, and overnight low. All right. Last 4-hour marker that we have to keep track of is the opening print, but we obviously cannot put that on the chart until price starts trading, right? That's the opening print is the first traded price of the day. Now, our proven strategy is to take that opening print and watch price action from there. So if we get a higher low at or above opening print, we want to look to get into calls, targets being overnight high and previous high a day. If we get price action that drops below opening print, we get some type of lower high underneath or at opening print, then we want to look to get into puts, targeting a previous low a day and overnight low as our targets for, from a scalping perspective. Of course, if we get to those levels and continue to go past it, then we have additional triggers and targets that we'll talk about as well. But that's just the easy, straightforward method. Higher lows at or above opening print, look to get into calls. Lower highs at or below opening print, looking to get into puts. So you can see we were dealing with this 1-hour downtrend line here that we've got this light blue dashed line. Now, again, we don't put a lot of weight into downtrend lines alone, but we look at where they intersect with our major horizontal levels, like last week's 50% level. All right. And so we would expect that there to be some resistance around this level. And that's what we got. We opened, we pushed down. We got this lower high below the opening print, so you could have entered puts here. And we got the push down to overnight low. Right, so you could have unloaded your full position if you wanted, if you didn't want to trade all day and sit and watch the tape, because these have been some pretty sideways, boring days for the last 2 weeks, these holiday shortened weeks. So you could have taken all your profit here, especially if you were at the money, in the money with multiple contracts. Or you could have, unloaded half or part of your position and waited to see if we were going to fail below this overnight low, right? So you can see we after we pushed down to overnight low, we got just basically a whole day of sideways action until that last hour and a half of the market being open, and things just kind of started to break down. I think people just got worn out if they were staring at the screens. Again, we took this first move in the morning and we were done, right? But if you stayed in it, you were you did get the benefit of your patience, right? And one more push to the downside, and we actually not only tested last week's low, but pushed below last week's low, triggering the 2 down on the week, locking in last week as a lower high. We'll take a look at that there in a second on the week chart, but just looking at the proven repeatable strategy, there it is, right? Not the prettiest one today, not the quickest one. It did take a long time to develop the full move, but when we're talking about the targets for the proven strategy that we use, we did hit that final target, which is overnight low, right? Obviously, previous low a day wasn't going to be a target because that was slightly above the entry, and the previous low a day didn't have the most magnitude there, but it was a small move. And again, if you were at the money or in the money with multiple contracts, you're able to get out a decent amount of profit there, right? That's really all we had from the 5 minute. If we take a look at the 1 hour, right, we are still in a downtrend, right? So here was the 1 hour downtrend line that started back last Friday, and took a while to push back up through into which we did a couple of days ago, but obviously we fell back through, and another lower high here as well with a lower low. So we're just continuing this 1 hour downtrend to the downside. With the 4 hour, kind of the same. Let's go ahead and bring up this chart, make it a little bit easier for everyone to read. But you can see we've got a high here, equal high. Actually, it was actually a slightly lower high, as we can see by this daily downtrend line. And then we've got this soft lower high here with the lower low. So we've got a downtrend started on the 4 hour, the 1 hour, and the 4 hour. We go ahead and switch out to the day chart, and we're starting a downtrend there as well, right? So equal high, really lower high, and we've gone lower low. So it's the start of a downtrend. Now, if we look at it from the overall move of this consolidation that we've been in since this bounce, we could just be producing a broadening formation. Let's bring out the trend line. There we go. So if we bounce on Friday and we push up, right, we've just got a small broadening formation here with this daily broadening formation in orange and daily broadening formation in orange. Again, this short dashed purple line was last week's low, and you can see we've poked through that now. And oops, let's remove that because that's not real. So if we go to the week chart, we do see, right, we've got this lower high. It is a concrete or a solid lower high. It's not, part of a 3 or anything like that. That would be considered a soft lower high. So we've got a concrete lower high here. Now we just need to see, are we consolidating and just moving sideways, i.e. making a higher low here? Or are we going to start a downtrend and go for a lower low? If that's the case, right, now we've got to look at, selling calls, possibly selling calls, for the longer term, or not longer term, but midterm, but definitely buying puts, right? We could just be going back to test the overall range, the higher range, not just this latest one that we've been in, but we could just be pushing down here to fill this gap, possibly even fill this gap. This is where we had the bull flag, right? If we scrunch things up just a little bit here and widen it out, right? This was the April 7th low. Here is the flagpole. Here was the 11-week flag, sideways action, and that's what we've popped out of. So do we come back down? Yes, this is a level of support, a pretty major level of support, but this is the kind of line in the sand level of support, right? Obviously, we would allow for the dip into this gap to close the gap, but we would be looking for some type of bounce at this point. If not, then we're looking at, we've got some more gaps to the downside that probably will go get filled, right? But we would need some type of pretty heavy negative catalyst to take us down to those levels. I don't see that on the horizon right now, right? Of course, we're a whole new year now at this point, so let's see what the year has for us. We don't like to make predictions. We don't want to get too far ahead of ourselves, get too far over our skis, whatever you want to. Whatever phrase you want to throw out there, we don't want to do that right now. What we want to do is just be ready for price action, whichever direction it goes, up or down. So just keeping an eye on things. We always like to zoom out, make sure we're level set. Let's take a look at the month. We ended up finishing an inside month, finished in the upper half, but a bigger wick on the top of the month than the bottom of the month. So not the most bullish, but just definitely not bearish, right? We finished green, meaning we closed higher than we opened. We did, try and test those highs and push up, but weren't quite able to make it. Still dealing with last year's or 2024's 50% level. We've got to be careful what I say last year's, because last year is now 2025. But 2024's 50% level was such a major support resistance level that we wanted to make sure we kept it on the chart for 2026. But again, the month finished, neutral, bullish leaning, nothing breaking down basically, right? From the quarter, we did see the pullback, at the end of the quarter, but we are still in this one combo two down, combo two up strat reversal on the quarter, which takes us to the high of this 3, which is that 70.08 target that we've been shooting for. All right, so again, nothing breaking down on the quarter, but we do need to watch the quarter, because if the first quarter of 2026 ends up going 2 down, that ends up locking in fourth quarter 2025 as a lower high coming from a lower low, i.e. starting a possible downtrend. Well, not possible, starting a downtrend. At that point, we would have to just try and make sure that we would get some type of higher low to show, at the very least, consolidation. But going 2 down on the first quarter of 2026 is not something that I would want to do personally, or want the market to do personally. So we'll just continue to keep our eyes on the charts there. But again, nothing breaking down. We just like to make sure that we know what could happen on both sides of the equation. And then now we are finally done with 2026. We just need to go 2 up on the year, right? So the high of 2026 with 50.76. If we can go higher than 50.76, if we can even go 50.77 before we go 2 down, then we lock 2025 in as a higher low, right? We got back here in 2022, we got down to 621. April 7th low of 2025 was 723. So looking at a higher low, and continuing an uptrend on the year. If we go 2 up, then we go 2 down. That triggers a 2 down, 2 up reversal off of the push down that we had last year. And again, the target for that is the 70.08 up here. So, just want to start 2026 off on a good note, on a good foot, whatever you want to call it, and really get to triggering that 2 up on the quarter and the year. If we can do that, I feel much better. And adding to our 2027 and 2028 contracts. Otherwise, it's more of a monitor the situation type of thing, and you've got to look at it from all the way from the week to the month to the quarter to the year out, to make sure that you don't need to unload any 2027s or 28s, taking profit to avoid giving a bunch of profit back while we go through some larger pullback, right? But again, that's what we have for everything from the 4-hour chart all the way up to the 1 year. Nothing breaking down. Of course, the lower time frames, right? Like on the 1 hour, we do have the breakdown. But what are we doing, right? Are we pulling back to set a higher low on the week chart, right? Just to further confirm consolidation, possibly. We just got to see, right? When these smaller time frame charts turn around, then we'll be able to see where our next target is to the upside. But for right now, we have set that lower high on the week chart, and at best we're consolidating, right? At worst, we're starting a downtrend. So let's take a look at the charts here and talk about the market makers' expected move, high and low. So if we go to, let's pull up the options chain for SOXL. Guess I didn't have everything set up right. But if we pull up the options chain, this is Thinkorswim, and we go to the options chain for January 2nd, which is Friday. We look in the parentheses over here, we see a plus or minus 1.613. What that's telling us is the market makers expect a plus or minus $1.61 move. Right, so with the close on Wednesday being 42.03, you add 161 to it, you subtract 161 from it, and if we look at our notes, we can see that we have a range of 43.64 to 40.42 for the market makers' expected move on Friday. All right, so if we go back to our charts, we can see we've got this marked out. 43.64 is the high for the market maker's expected move, and 40.42 is the low. Now, what that would imply is we're probably going to move lower on the day. Let's just bring this up. Which chart do we have? Yeah, that's the right one. So yeah, if we look at things from the day chart perspective, the market maker's expected move high is not above Wednesday's high, but the market maker's expected move low is below Wednesday's low. So that would imply we should be making another move lower, but we do have the market maker's expected move for the week that is here at 41.15. So we got to see how that plays out, right? At the beginning of the week, the market makers only expected us to get down to 41.15. It appears though their opinion has changed, but this was a specific. This level came in specifically based off of options interest, so there is a reason for that being there. So don't expect the full market maker's expected move for the day. It's definitely possible, but watch for any bounces or just even sideways action at the market maker's expected low for the week, which at the beginning of the week was 41.15. Right. Let's go ahead and start talking about Friday. We'll start off with the scalping chart or the proven strategy that we use to scalp early in the morning and get early entries into bigger moves for trending days. And that's what we talked about earlier on in the video, and using the 4-hour markers, right, to our advantage. So we can see right now we've got previous high a day, which is Wednesday's high, 44.15. We've got previous low a day down here at 42.01. Overnight low right now is 41.86. Let's just say, by the end of overnight action on Thursday night, Friday morning, let's say the overnight high is up to 42.85, right? This is just for example purposes. Let's say that we get some type of open somewhere in between the overnight action, right? So this price level 1, let's just get things organized. We accidentally duplicated it. Edit, we'll just call this opening print. If I can type. All right. So if this is our opening print on Friday, again, the simplest method that we use, we look for higher lows at or above opening print to get into calls. We're targeting overnight high and previous high a day. If we push down after we open and we get a little bit of a bounce, say off of last week's low, but then we end up still making this lower high at or below opening print, we want to look to get into puts, targeting previous low a day and overnight low. All right, so that's pretty simple. Let's go to the 4-hour chart and talk about more of a day trade or partial day trade, something a little bit longer than a scalp. We did talk about on Tuesday, that we could get this 1-2 up, 2 down. We got it, and then we got the continuation on Wednesday because it had not completed, right? The magnitude of that move was the low of this 2 here to the left of the 1 that started the 1-2 up, 2 down. Right, so obviously we reached the strat completion or reached magnitude on that move here on Wednesday with the continuation, but now we've got kind of the opposite in reverse, right? We've got a 3-2 down, leaving on the table a possible 3-2 down, 2 up reversal. The magnitude of that move is only the high of the 3, so again, it's not going to skyrocket things, or we don't have a huge magnitude on the move, but what we do have is a large magnitude to the trigger, right? So this 2 down was a very large candle. Depending on where we open, it could take a long time to finally get to that top of that candle and trigger, right? So it may take the full 4 hours. So you would want to look for something on the lower time frames. Look at the 15-minute. Look for some type of higher low at or above opening print on the 15 to get into a call that would take you up to the trigger on the 4 hour. But regardless, there is a possible 3-2 down, 2 up on the table that would take you to 44.15 at magnitude. If we continue to the downside, obviously it would give us a 2 down, 2 down situation, triggering at 42.01. Again, watch that 41.15 as a possible bounce or point where we go sideways. But that 40.42 is the market maker's expected move for the day. So look for things to continue to that point. Now we do have Quarter 4 of 2025, the 50% level is 39.44, and that lines up pretty well with the 78.6 fib of the April 7th bull flag that I showed earlier on the week chart. So that would be my next major level of support, right? We have the market makers expectations, but those are not end all be all levels, right? We don't have to bounce. We don't have to go sideways at those levels. So what I see is the next major support levels, this 39.44 to 39.26 level. All right. If we look at the day chart, again, we are in this starting a slight downtrend, right? We did make a slightly lower high on what was that, Tuesday, and then went lower low on Wednesday. So from a technically speaking, that is a downtrend, but at the same time we are kind of ranging in the middle of a larger range, right? So we had this big drop, bounced about halfway up, and then just moving sideways. So those were holiday shortened weeks. Volume is not the same. We're looking to get back into the normal swing of things. I would say more next week. We might get a little bit more volume on Friday, but there's still people on vacation and things of that nature. Excuse me, that we still won't see the full volume that we normally see as we start ramping up next week and into just normal trading sessions, right? So from the day perspective, yes, we did start a downtrend. Again, the same levels that I called out just previously on the 4 hour as support, 39.44 being that major level of support. If we do get that pop to the upside, don't want to get too far ahead of ourselves. It is coming from a lower low, and we've got last week's high, this daily downtrend line that kind of match up. But also if we break through that, we do have this daily broadening formation that's not too much higher above it. So 45, 47, that would probably be the highest I would see us going, even if we had just a banger of a day, right? That's because we would have to get all of this back. We're way past market makers expected move at that point. But yeah, this 44.79 to 45.47 would be the max that I think that we go on Friday, even if we do have a crazy green day, right? So just kind of neutral at this point, waiting for the new year to really, get into the swing of things. Again, from the week perspective, we did go 2 down on Wednesday, right before the end of the day, locking last weekend as a lower high. So technically starting a downtrend on the week. Actually, we're not starting a downtrend. We're coming from a higher low, so we're consolidating. I apologize. I don't know why I just said downtrend. But we do have that lower high, and it appears that we are consolidating at the very least. So continue to watch that, right? Let's go to the notes and just look at the hard numbers here. We think we've gone over enough charts. This is for Friday, January 2nd, 2026. There will be 251 trading days left in 2026 on Friday. We know Wednesday's close was 42.03, and we know that the week is. Oops, this needs to be green. Say green. Come on now. Let's get these notes right, just to start the year off right. Show colors. This needs to be green. There we go. So to turn the week green, we need to get back up to that 42.98. Now it's a new month, new quarter, and a new year. So we don't have our flip levels yet, right? Monday will bring all 3 of those. So the opening price on Monday will be the flip level for the month, the quarter, and the year. We know that the market maker's expected move for the week was plus or minus $3.06, giving us a range of 47.27 to 41.15. And we know that the market maker's expected move for Friday itself is $1.61, giving us a range of 43.64 to 40.42. We know where our gaps above and our gaps below are, so we always want to keep those in mind. And we know that from a scalping perspective or an early entry perspective on a day trade, we want to look for higher lows at or above opening print to get into calls, and we want to look for lower highs at or below opening print to get into puts. We talked about on the 4-hour chart, if we continue the action to the downside, that is a 2 down, triggering at 42.01. And we've got these targets of 41.15 and 40.42. That is essentially market makers' expected move for the week and for the day. If we go to the upside, that does trigger the 2 down, 2 up that we talked about at 43.32. Not the largest magnitude, but it is there at 44.15, and we've got an extended target. Oops, I think that was 45.64, not 43.64. All right. Now from the day chart, if we go to the downside, that would be a two down continuation. And oops, get this right. There we go. Let's start the year off right. All right, so that would be a two down continuation, triggering at 42.01. Again, the 40.15 and 40.42 targets, but we also have this extended target of that 39.44, which is last quarter's 50% level. It also lined up with that 78.6 level, fib extension of the bull flag from the April 7th low. Now, if we go to the upside, that gives us a two down, two up, triggering at 44.15, magnitude of 44.75, so not the largest magnitude. So we do have some extended targets out here, and that 46.79 is still hanging out there for us. It's been a major level for the last few months, level of resistance. Tried to make it support, but that is 2024's 50% level, and the biggest major support resistance level that we have in frame right now. Now, from the week perspective, as we talked about, we already triggered this two up, two down once we went below 42.22. We do have an intermediate target of 39.16 because we are in what appears to be this consolidation. But if we were to make it to magnitude on Friday, it would go all the way down to 35.70. Do we have a $6-7 move on our hands on Friday? I don't think so. But again, we've got to have our notes full and ready, right? Now, if by some crazy miracle we pulled a 3 off or a bullish engulfing candle, we'd have to shoot all the way up to 44.79. Not the hardest thing to do in the world, just because SOXL is a high beta ETF. We had very consolidated price action last week, but do I expect us to get a $2.70 move tomorrow? No, I don't. So it would be nice if we do get it. Maybe we get a catalyst, and with the catalyst, I don't think it would be too hard to pull off a 3 or a bullish engulfing candle on the week, but we'd need to make it to 44.79 to do that. If we did, we do have our targets here to the upside. Now, to talk about January, because we had that inside month in December, we have a possible reversals continuation situation on both sides of the ball, right? So if we go to the downside, that gives us a 2-1, 2 down, triggering at 35.70. Magnitude would be 28.12. But we do realize we are in a bit of consolidation and an uptrend. We're in a 1-2 down, 2 up reversal on the quarter, right? So we know that it could be a little tough to make it to that magnitude. So we do have a few intermediate targets here. Take that first one out. I don't know why it's there. So 33.18, 30.68 on our way down to 28.12. Now to the upside, we could go 2-1, 2 up. We'd have to reach 50.09 to trigger that, and there's not a large magnitude there. It'd just be 50.19. But we do have the extended targets out here, 50.76, 51.91, and so on, right? On the quarter, we would have a chance to continue this one combo 2 down, combo 2 up if we remain above 50.76. Again, the ultimate magnitude for that move is 70.08. So we've got our intermediate targets here on the way up. But if we do continue the trend to the downside, that gives us that 2 up, 2 down. Again, that would lock the fourth quarter of 2025 in as a lower high. It's coming from a lower low, so we are starting a downtrend on the quarter if we were to go below 28.12. Right, so just keep that in mind. If we do trigger that, the magnitude is only 22.57, so it would only be like a $6 move, but we would have already made a pretty large move to get down to 28.12 to begin with, so not a pullback you would really want to see. And if we do continue that downward price action, we have the extended targets there. Now on the year, we are looking for, if we do go 2 down, if we go by some reason, possibility we get down to 723, right? That continues this 1-2 up combo 2 down, magnitude being 621, right? Don't think we're going to see that, but again, beginning of a new year, we've got to keep all possibilities on the table and be prepared either way. We are a lot closer, however, to going 2 down, 2 up on the year. So if we reach 50.76, really 50.77, then we've triggered that 2 down, 2 up, and the magnitude of that move is 70.08, right? We reach that 70.08, the next target would be all-time high 721. So that's what we have for the triggers and targets today, ranging all the way from scalps, intraday trades, all the way up to the 1-year chart, which is important because we are starting a new month, quarter, and year on Friday. So we do want to make sure that we are prepared. I hope everybody enjoyed today's video. Again, we just tried to cram in as much information as we could without taking up too much of your time. Hope everyone had a great New Year's Eve celebration and were able to, do any recovery needed on New Year's Day. But we will end the video here. We will end it like we normally do if you're watching this Thursday night. We hope you get some good rest tonight and wake up refreshed tomorrow morning. If you're watching this Friday morning or Friday during the day, we hope you got some good rest last night and woke up feeling refreshed this morning. And we just look forward to getting out there and trading with you.